At the end of every earnings call, Jensen Huang gets the last word. Most people don't pay attention to it. They've already moved on to the next ticker. But on May 20th, 2026, what Jensen said in those final minutes wasn't a wrap up, it was a declaration. Demand has gone parabolic. Agentic AI has arrived. Tokens are now profitable. 3 sentences. But what they describe isn't a quarter, it's a structural shift in what NVIDIA actually is and what it's becoming. The earnings report told you the numbers, the conference call told you the strategy. And the strategy is this: NVIDIA is no longer building GPUs, it's building the entire infrastructure of the AI era. That changes everything about how you should read this company. Here's the clearest signal from the call. An analyst asked Jensen about growth philosophy, whether NVIDIA could grow faster than hyperscaler CapEx. Jensen's answer was immediate. We should be growing faster than hyperscale CapEx. Think about what that implies. Hyperscalers are spending $1 trillion this year on infrastructure. Jensen isn't saying NVIDIA captures a piece of that. He's saying NVIDIA grows faster than the entire category. The reason he gave wasn't confidence, it was structure. Customers don't buy GPUs, they build AI factories. And the right economic metric is not the purchase price of the GPU, it is the lifetime cost of an AI factory producing intelligence. Token per watt, tokens per dollar, uptime, utilization, time to production, software durability, asset life. NVIDIA excels at all of them. That's not a GPU company talking. That's an infrastructure company defining its own category, and then telling you it owns every dimension of it. On the earnings report, networking was a number, $14.8 billion, up 199% year over year. On the conference call, networking became something else entirely. Colette Kress said it directly. Spectrum-X, NVIDIA's end-to-end Ethernet platform purpose-built for AI, is now larger than all Ethernet network peers combined. InfiniBand grew more than 4 times year over year. This is not a side product. This is not an upsell. This is NVIDIA selling the pipes that connect the engines, and it's now bigger than every competitor in that space put together. Here's the structural point. When you buy a GPU from NVIDIA, you almost always need NVIDIA networking to connect it. And once your entire AI factory runs on NVLink and Spectrum-X, the switching cost isn't just financial, it's architectural. You'd have to rebuild everything. Jensen didn't build networking to complement GPUs. He built it to make NVIDIA infrastructure increasingly difficult to replace. That's not a product, that's a moat. For 2 years, the skeptic argument on NVIDIA went like this. AI spending is a bet on the future. When companies realize the ROI isn't there, CapEx will collapse, and so will NVIDIA. The conference call directly challenged that argument. Jensen said it plainly. Tokens are now profitable, so model makers are in a race to produce more. In the AI era, compute capacity is revenue and profits. This is the inflection point. AI is no longer speculative infrastructure. It's revenue-generating infrastructure. The companies buying NVIDIA compute are doing so because it pays back. Now, not someday. And on Inference specifically, Jensen was precise. In the ACIE segment, the AI clouds, enterprise, industrial, sovereign customers, the vast majority of inference workloads run entirely on NVIDIA. Not mostly, vastly. When inference is profitable, operators buy more compute to generate more tokens. More tokens mean more revenue. More revenue justifies more compute. The loop is now self-feeding. And NVIDIA is the only infrastructure that runs it end to end. This was the most underreported moment of the entire call. Jensen announced that NVIDIA has visibility to nearly $20 billion in standalone CPU revenue in 2026 alone. Not Vera Rubin, the GPU system, Vera, the CPU, standalone. NVIDIA has never sold a standalone CPU before. This is a market they have never addressed, and Jensen put a number on it. A $200 billion total addressable market, opening in real time. The reason is structural. Agentic AI doesn't work like cloud computing. In the old model, you rented cores. The economics were dollars per core. In the AI era, the economics are tokens per dollar. Agents don't rent cores. They need work done fast. Jensen described Vera as purpose-built for exactly that. 1.5 times faster performance per core, 2 times performance per watt, 4 times density per rack compared to x86 alternatives. And then he said something that reframes the entire company. Vera opens a brand new $200 billion TAM for NVIDIA, a market we have never addressed before. And every major hyperscaler and system maker is partnering with us to deploy it. The $1 trillion in Blackwell and Rubin revenue visibility that Colette mentioned, that number doesn't include Vera CPU. It's on top. The hyperscaler story is well understood. 5 or 6 companies, massive capex, high visibility, high concentration risk. The ACIE story, AI clouds, industrial, enterprise, sovereign, is almost completely misunderstood. Jensen spent more time on this than anything else in the call, and what he described isn't a second revenue bucket. It's a different kind of customer base entirely. The second category is hundreds, thousands of companies. In the future, it will be hundreds of thousands of companies. Those aren't hyperscaler numbers, they're enterprise software numbers, but with GPU infrastructure attached. And inside that category is something that didn't exist as a revenue line 2 years ago: sovereign AI. Nations building domestic AI infrastructure not for commercial ROI, but for strategic independence. Jensen's framing was direct. These customers want to buy systems. They want to operate systems. They don't want to build chips. And semi-custom silicon from competitors doesn't serve them. The hyperscaler cycle is real. When AWS or Google pauses CapEx, NVIDIA feels it. But when France or Japan or Singapore pauses, they don't. National compute infrastructure isn't a quarterly budget decision. It's a decade-long commitment. Jensen said he expects ACIE to grow faster than hyperscale over time, and both are going to grow incredibly fast. If that's true, the concentration risk that has been the central bear case on NVIDIA for 2 years is structurally diminishing, quarter by quarter. The first video asked, is NVIDIA's growth sustainable? After reading the conference call, that's no longer the right question. The right question is, what is the ceiling for a company that sells every layer of AI infrastructure? The GPU, the CPU, the networking, the software stack, the full system solution to every customer category on the planet. Jensen closed the call with 5 points. The first, NVIDIA is the only platform that runs every frontier AI model. The second, they are in every hyperscale cloud. The third, they uniquely address the new AI data center segment, ACIE and Sovereign. The fourth, CUDA extends all the way to the physical edge, robotics, autonomous vehicles, AIRAN. The fifth, Vera CPU opens a $200 billion market they've never touched. 5 categories, 1 architecture, 1 ecosystem, built over 3 decades. At that point, the label doesn't fit anymore. You can't call that a GPU company. The bear case on NVIDIA has always been about concentration, too dependent on a few customers, too dependent on one product. The conference call was Jensen's systematic answer to every version of that argument. He didn't defend the GPU business, he expanded the perimeter of what NVIDIA is. Whether the execution matches the ambition, that's the only question left. And that answer won't come from a conference call either. The infrastructure build-out is clearly happening. The open question is whether the economic value created on top of it will ultimately justify the scale of capital now being deployed. It will come from the numbers 4 months from now.